Ladies and gentlemen, Greg Mikulowski from ForexLive.com. Today's date is February 29th. Yes, it's a leap year 2024. Bonus day for you traders out there. In this Kickstart video, I take a look at three of the major currency pairs, the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar from a technical perspective. We'll talk a little bit about the fundamentals that just came out, including US PCE data. So let's get started. We had the US PCE data come out with a 0.4% for the core measure month on month, 2.8% for the core year on year, down from 2.9%. The headline number came in at 0.3%, which was as expected as well, and that measure year on year came down to 2.4% from 2.6% last month. So everything was as expected. We did see continuing claims move a little bit higher than expectations. Or a little bit more than just a little bit. That is a softening of the labor market from that perspective. The initial jobless claims was also a little bit higher, but still low at 215K. They're expecting 210K for that measure this week. So overall, we're seeing U.S. stocks move higher. After the report, we're also seeing yields move lower. The two-year yield is at 4.64%. That's near unchanged, and the 10-year yield is at 4.267%, down 0.6 basis points. They were up about 2 or 3 basis points prior to the report. So yields have moved down, pushing up stocks. The NASDAQ index is now up 106 points. So that's the overall look at the markets outside of the Forex market. Taking a look at the euro versus US dollar from a technical perspective, what sticks out in trading here today, first of all, we have up and down price action, but the 200 bar moving average on the 4-hour chart did hold support down here. We also have the 200-day moving average just above that level, and this swing area through here, which we've been looking at between 1.0803 and 1.0824, did a good job of holding support near the high of that level on this dip in the current hourly bar. We saw the price of the euro versus US dollar move higher, but then come off the high price, currently trading at 1.08387 or 378, and sort of in the middle of the current bar for that currency pair. So although the dollar moved lower initially, it is backing off. We also remain below the 38.2% retracement of the move down from this high right here. This is the December high to the low price that we saw in February. That 38.2% retracement comes in at 1.08640, and the high price that we saw earlier this week came right up to that 38.2% retracement and found willing sellers. Last week we did move above that 38.2 briefly before rotating back to the downside. People know me, like to see a trend-like move retrace to and through the 38.2% retracement. So although the price is above these moving averages, we still need to get above that 38.2% retracement to prove that the buyers are taking more control. If they can do that and stay above that level, that would be indicative of that type of dynamic. Right now, we have resistance against the 38.2, support against the 200 bar moving average on the 4-hour chart, 200-day moving average, 100-day moving average, low of the swing area. All this area right through here is really support for the euro versus US dollar. So the battle goes on between buyers and sellers in this up and down trading week for this currency pair. Let's take a look at the dollar versus yen. Takata in Japan today, Bank of Japan's Takata, gave some hawkish tilt to things like wages and potential rate rises, and that pushed the dollar versus US dollar yen to the downside, the yen higher. We have what we know is that we've had this ceiling in place for this currency pair with a number of different highs stalling near this ceiling area right through here, including in trading yesterday. Market came within a few pips of the high price for 2024 at 150.87 and found willing sellers against that level and rotated to the downside off of the comments from Takata, and that pushed the price below the 100 bar moving average on the 4-hour chart. We did see the price rebound back higher just before the PCE data, but came to the high of this swing area through here between 149.70 and 150.15. I'm going to have to go back in time to show you where that is derived from. go back to this area back to September, October, November, and you can see the number of different swing highs and swing lows that came within that area, either as support or resistance. So we did dip below that, the low of that swing area earlier today after the Takata comments, but rebounded back higher to the height of that, but held that resistance, and now it's trading below the 100 bar moving average of the 4-hour chart. Looking to get below the 149.70 level. If it does that, then we'll look toward the low front or this low swing area of 149.52, and then toward the 38.2% retracement of just this last move to the upside from this low right here to this high right here. That 38.2% retracement level comes in at 148.96, right around the 149 level. The rising 200 bar moving average on the 4-hour chart is also within shouting distance of that level. So sellers are trying to take more control below the 100 bar moving average, get below 149.70, and opens the door for further downside in the dollar versus yen. Let's finally take a look at the Australian versus US dollar. And what we found in yesterday's trading, what does the low price did find support against the 100 bar moving average on the 4-hour chart. Nice hold there. Also stayed above this lower swing area, which was largely defined back in this area right through here, where the price for 5 weeks time traded up and down, up and down, up and down. We're still continuing this up and down, up and down, and up and down, but we are trying to hold above that old swing area over the last week or so of trading, and we did hold the 100 bar moving average and above that's the high of that swing area. The sterling versus US dollar, the 50% retracement of this move down from this high right here to this low right here comes in at 126.72, and the high price that we saw near in trading here today stalled right around that level, and also in trading yesterday, the high price that stalled at that level. So watch that level on the top side at 126.72 as a ceiling in between the 100 bar moving average down here and the 50% retracement sits the 200 bar moving average at 126.53, and the broken 38.2% retracement, which comes in at 126.36. So lots of consolidation in this area as well for the sterling versus US dollar. If we do get below the 126 level down through 125.94, we're going to have the 200-day moving average or 100-day moving average in play. If we move above the 50% retracement, we'll look toward the 61.8% retracement of this move to the downside as the next target on the top side for that currency pair. So there you have it, a Kickstart video, or take a look at 3 of the major currencies. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.